gold went up because of the war. Now the war's over, gold's going to go down. It's like, no, there's fundamental issues regarding the dollar. I invest for the 99% of the time, not for that 1% of the time when there's a big silver price explosion. And silver's been in a deficit of 100 million ounces plus for over 3, 4, 5 years. You need a third of an ounce of silver to produce one solar panel. And as the world continuously moves there, like there aren't enough commodities to go around.
Okay, guys, so today we have Garrett Goggin, the founder of Golden Portfolio, and we will discuss the state of the overall economy, gold, silver, and miners. So, Garrett, thank you very much for being here.
But good, great. Thanks for being here.
Thank you, Garrett. So, I would like to start with the overall economy. So, we had Jerome Powell really telling us that he's not sure what's happening with the economy. I was talking with Rick Rue last week, and he was saying that he already believes that we are in a recession. My personal view is that we could be in this stagflationary period similar to 1970. So what's your view, Garrett? What do you think is happening right now?
Um, you know, well, it's been crazy past week or so, right? With the Iran war, with Israel, U.S. bombing, Iran and the war being over. There was, a lot of uncertainty over the weekend. But, and a lot of pundits like to tie gold to wars. Like, all right, gold went up because of the war. Now the war's over, gold's going to go down. It's like, no, there's fundamental issues regarding the dollar. The US just came out with their budget for May. It was a deficit of $316 billion. It's the third largest on record. Like the spending is going to continue. They just passed a spending bill. Trump's going to spend another $2 trillion per year. That's $8 trillion to the deficit. Last time he was president, it was $8 trillion. When Biden was president, it was $8 trillion. Now Trump's going to spend at least $8 trillion now. So I'm focused more on, I'm always focused on the money. I always say follow the money because it's what it's all about. That's why people invest. That's what the markets are all about. And the spending is going to continue. And you look at you look at Trump with Elon Musk and Doge that came in to, cut the unnecessary U.S. spending, and they did a good job right away. But we haven't heard anything from them in months. They've dismantled, the whole Doge unit because they know that if they cut U.S. spending, the whole U.S. economy would go into a downward spiral, and they can't let that happen. So the spending's going to continue, and we're at the point where it's going to increase, and it needs to increase exponentially. And then, you get China that just released their treasury holdings, and it's down again, and they've been reducing their treasury holdings for over the past 10 years. Our foreign trade partners, they don't want to hold U.S. debt because they know the end run of a tremendous loss of purchasing power and inflation and, a worthless dollar. So you need to be focused, on that. And these are things that aren't going to change anytime soon. There's no way the U.S. is going to be able to balance their budget. They need to keep constantly spending the money to keep the economy afloat. So, I'm taking a longer term view here. Gold's pulled back a little bit, but there's nothing to be concerned about.
And Garrett, what's your view on Trump's plan to bring manufacturing back to US? So for me, it looks like that if it does occur, it's very bullish for the commodity sector overall, right?
Yeah, I would think so. I think Trump's doing a good job. He's trying to restore blue collar jobs in the United States. And if you look at blue collar wages, they're up 25% over the previous year. This is one of the first times it's ever happened. So, the average U.S. citizen is benefiting from this. But the way we're being impacted is companies are being squeezed on their profits because they're having to pay more, but it's going to the people. So, it's a good thing. Regarding its impact on commodity prices. I don't know, whether China's using the commodities or US is using the commodities. The amount of supply is basically the same, right? So, I don't see a huge impact there, but the world's population keeps growing. It needs to constantly grow in order to move forward. And I just saw regarding commodity consumption is the amount of gigawatts. China installed another, few gigawatts of solar, over the past year. And, it's been moving towards having the majority of their electricity generated by solar, and that's silver. And silver's been in a deficit of 100 million ounces plus for over 3, 4, 5 years. You need a third of an ounce of silver to produce one solar panel. And as the world continuously moves there, like there aren't enough commodities to go around.
And you mentioned gold, Garrett. So we already had this big run. Of course, some gold bugs are not happy. They want higher prices. But even with the current prices, we can see price moving up. Now there's sort of stagnationary period. But um, overall, we see that the price did not go up because everyone suddenly began to low gold. It's because the big players, the central banks, they're buying it. So what do you see happening with that? And is that a good sign?
Yeah, it's a great sign. The U.S. brought back 2,000 tons of gold to back to the U.S. Over the past year or so. Treasury Secretary Scott Bessent has been, he's prepared for another great reset, a new Bretton Woods, perhaps called the Mar-a-Lago Accord. Like something's happening here. And then one of the things that I believe is happening, well, we know this for sure. Foreigners are backing away from their debt. They're choosing to hold gold instead. The reason why they did that is because the U.S. weaponized the dollar when they shut Russia off from billions of dollars of value. If you own treasuries or short-term notes, the Treasury Secretary can press a button and all your billions are gone. So foreign trade partners are preferring to hold gold in their vaults, protected by their military that no one can ever touch. Um, and that's going to continue. A couple points here. The U.S. debt, there's $37 trillion of debt. Foreigners aren't buying it. How are we going to fill the gap? Like Trump has said constantly, we need yields down. He's been attacking Powell, calling him too late Powell, saying rates should be lower, but Powell's not doing it. So, look for a replacement to the Fed or Powell's term comes up at the turn of this year and look to a very accommodative Federal Reserve chairman to be appointed. And then, you know, uh, regarding the Fed and the Treasury, like I think they're going to plug the gap. Like we're looking at a new QE. Because foreigners aren't buying the debt, the Fed's either going to have to step in, and if the Fed is reluctant to do it, the Treasury is going to expand their powers in order to do that as well. Scott Bessent was mentioned as a favorite to run the Fed. Maybe he can run the Fed and Treasury. It's never happened before, but they might change the rules. But something's happening. And then lastly, the BRICS. The BRICS countries have a meeting in July. They keep talking about Enbridge. They keep talking about a digital yuan that's 40% backed by gold. And a lot of this has been conspiracy theory. But some recent news on some of the economic think tank websites have confirmed this. So, if you get a digital yuan that's 40% backed by gold, what would you rather have? The, yuan backed by gold or, the US dollar that's backed by our military, I guess.
Hmm, yes. And Garrett, when it comes to miners, so we already seen the metals performing quite well. However, well, I suppose the large companies, some of them did quite well, but if we compare their valuations, let's say per cash flow or whatever, they still look quite cheap, right?
Yeah, I've been shouting from the rooftops for about 6 months about Newmont mining. It's gushing cash. It bought back shares last year, hundreds of millions of dollars of shares last year. It pays a decent dividend. And Newmont was trading at a 40% discount to its valuation on a free cash flow basis. And since then it's closed the gap a little bit. It's trading, at about a 10% discount to fair value based on this. I run a regression over the past 20 years that compare the enterprise value of the miners versus the amount of free cash flow that it generates. And, one thing regarding that, I model it using the current price of gold on a daily basis where, a lot of the analysts get in, they look at last quarter's numbers, and last quarter's numbers were based off a gold price of I don't know, 2,800 and gold's 3,200. You got to run the numbers on a daily current basis in order to estimate, what they're going to generate over the following quarter. But what happens is, so the market, you get the underlying free cash flow or operating cash flow, and then the market decides what to value that. And over the longer term, it's about 7.7x. And why is that 7.7x? because if you do a 5% NAV discount of a dollar over 10 years, its value is 7.7x. A gold mine's value is a gold mine's life of mine is about 10 years. So naturally, the multiple they get is about 7.7. But what happens is that will fluctuate upward and downward based off market sentiment, showing whether investors are pushing up the assets or pushing down the assets. And, the miners, trade as low as five, they trade up to, eight or nine. And right now, Newmont's fairly valued on this, but, we see when the price of gold peaks, the stocks peak as well, because investors push that value above that natural equilibrium value. And at market peaks, it trades at a 1.6x premium to NAV value. And right now they're trading at fair value. So that shows you that miners are a little bit undervalued based off their free cash flow and operating cash flow, their profits that they're generating right now. And it shows you that market sentiment remains subdued. And I can see that I measure GLD shares outstanding and GDX shares outstanding. It's an ETF. So when money comes in, shares outstanding increases. When shares are sold, shares outstanding decreases. The GLD shares outstanding is 100 million shares below its peak back in 2020. Like, we're nowhere near our top. Investors are not rushing for gold. Investors are not rushing for gold stock. GDX shares outstanding is down 30%, with the GDX up 56%. So we're nowhere near at top, and the valuation shows me that.
Sure, and even if you look at the bank's estimates, they're way lower than the current price even, so they all expect the price to go down.
Yeah, all the price decks are always, trailing using whatever. I've seen a couple of feasibility studies at 2150 gold, 2800 gold. But yeah, it's backward looking. You need to use the current gold price to estimate the value of these mining equities. And I've got a couple developers in my portfolio that are going to begin production next year or in 2027. They're trading at 30% of NAV. What is an equity? An equity is the value, the lifetime sum of discounted free cash flows over the life of the asset. And at the Lassonde curve teaches us at first production, they should be equal. And they're still trading at a, 70% discount to fair value. Like, it's not even close. The opportunities I see are amazing.
Yes, and Garrett, if we look historically, so usually before we used to see that really during the gold bull markets, the price goes. So first you have the metal going up, then you have the big companies, and then the money sort of trickle down. Do you see any value in that, or do you just evaluate individual companies and you don't really look at the money flow from the big guys towards the developers and then the juniors?
Well, that happens naturally within the cycle. We've seen a couple acquisitions, but some of them have been bargain basement. What was it? Torex just bought out Reina Silver,
Right now. Yeah.
at a big, Rand is trading for only whatever, 12 cents. So they're coming in, they're starting to scoop up values, but we haven't seen the rush of acquisitions. And in 2011, when gold really peaked, we saw Ty Burt pay, what was it, $6.1 billion for Redback Tasiast. That Kinross has now turned around. They're generating good profits from, but at the time, they got in a bidding war and they extremely overpaid for the asset. We're not even seeing any bids yet in the development and exploration sector right now. We're seeing small here and there, but we're nowhere near top based on deal flow either.
Hmm. We started seeing some acquisitions in the silver market. So in my view, the best companies are getting acquired, like the Max Silver and a few of the other ones as well.
Yeah, Mag's been one of my favorites for years. And, the silver sector, a lot of people, like these unprofitable silver miners. The only thing that moves the needle in profitability is grade, right? Because you mine and it's on a fixed cost per tonnage basis. So, 2,000 tons per day, your costs are relatively fixed. In order to boost your profits higher, the only way you can do it is by boosting revenue higher. The only way to boost revenue higher is by grade, which is harder, improving recoveries or developing some efficiencies there, but it's grade. And the average silver miner operator, it's about 250 grams a ton. That's break even at best. Mag Silver's Juanicipio was operating at 666 grams per ton, generating extreme profits. Mag Silver just announced a dividend probably 6 months ago, they're like, we're gonna distribute 30% of our free cash flow to shareholders in the form of dividend. It was a 5% yield. Like this was outrageous. One of the highest grade silver miners, paying a 5% yield. That's only 30% of cash flow. That shows how undervalued the equity is. And Pan American swooped in and took out Mag Silver. Good for them because it's follow the money. It's all about the money. You know, you need to, in order to move the stock price higher, you need to improve earnings on a per share basis. That's why the miners haven't gone anywhere over 20 years, really, because when inflation pushes gold higher, pushes mining costs higher. So, the miners' margins are like, they're good right now. They're like 55%, but in general, they're, no higher than they were, 20 years ago. We saw Coeur mining come in and take out SilverCrest. SilverCrest metals was one of my favorites too. Why? Because its average grade was like 800 grams per ton at Las Chispas, and that generates tremendous profits. So both of these two high grade silver producers came in and got taken out because the majors follow the money and they want to grow their earnings on a per share basis. So you got to look at the deal value, you got to look at the money they get, um, and evaluate it that way. But a lot of the silver miners are unprofitable. A lot of people invest for silver, waiting for that once in a decade opportunity where the silver price spikes, but it only spikes up for a week. So 1% of the time, the bankrupt miner share price will double, triple, quadruple. But over the other 99% of the time, they're losing money and they're dilutionary and they issue shares constantly year in and year out. So I invest for the 99% of the time, not for that 1% of the time when there's a big silver price explosion. And, silver has acted really well. It's at $36 an ounce. It's held in there. Miners make profits on a daily basis. They mine silver, they sell silver. So the higher silver stays up there, these miners are going to be making more and more money. And it looks like it's ready for a big breakout. But I want to own the high grade quality ones. Like I don't want to own like the low grade moose pastures.
Yes, 100%, Garrett. And Garrett, how important is the management when you're evaluating a company? Because the examples you've given, that would be examples of a great management. Actually, they care about the shareholders.
Yeah.
But especially in the junior sector, there are so many bad stories going on around. So how important is that while you're evaluating a company?
It's huge. And, mining's a tough business. Like, dilution is unavoidable at some point, but there's miners that chronically dilute year after year after year. I'm lucky enough to have a Bloomberg. I pull it up. The first thing I look at is shares outstanding over the past 5 years. If shares outstanding went from, 50 mil to 300 mil, that's 6x. Like, there's no way you can create enough value to combat that. So that's one of the first things I look for. And then, I've been in the industry 20 years and, there's value creators and there's value destroyers. I stick with the value creators. Eric Fear founded SilverCrest Mining, the original one, and it got taken up by First Majestic. It's been out for SilverCrest Metals, and it got acquired by Coeur Mining. So, those are the sort of value creators that I follow. There's a guy, Alex Black, that man is Rio Alto. Rio Alto owned La Arena and Shahuindo in Peru, I believe. They were big open pit heap leaches. Tahoe, Rio 2 was acquired by Tahoe Resources, and then Tahoe was acquired by Pan American. And then Alex tried it again, and he's starting Rio 2. Rio 2 is a huge open pit oxide heap leach that's very easily processed, and is in Chile. And he's began construction last year. He's going to be in production this upcoming year at 20,000 tons per day rate. The stock has had a good run here, but the project scales up to 80,000 tons a day. Like that's going to triple, quadruple production, and the market is not prepared for that. And Alex, it was originally planned to be 80,000 tons a day, but Alex wisely scaled it back to 20,000 tons per day. Why? To limit dilution. And he actually sold a stream on it to Wheaton Precious in order to minimize equity dilution and protect his shareholders. So Rio 2 looks like, a great opportunity here. And aligned with shares outstanding. I look at insider ownership. A lot of these miners, the management doesn't own any. Why? Because they know their stock's a piece of trash. Why be exposed to it? So I look for, large insider ownership as well.
Yeah, that's very valuable. So thanks for that, Garrett. And Garrett, so I have a lot of younger audience as well, and there is so much choice right now. So they have the Bitcoins, the Teslas, there's us talking about commodities. What advice would you have for a young guy who's just or a gal who wants to get involved in this well building path, but maybe they're not sure where to start and what to do?
Yeah, I tell you what, one of my big products is the golden portfolio. It's a royalty-based portfolio. Royalties are the best way to play gold. Why? Because they have fixed costs that never change. Franco-Nevada paid $2 million for its gold strike NSR back in 1980, and it's returned 500 million to them. And it holds another whatever 500 million billion dollars worth of value. So, as the price of gold goes up, their profits increase. Orogen Royalties has been one of my favorites. They owned a 1% NSR in Silicon Merlin, owned by AngloGold, that grew their resource so quickly over the past 2 years. It's in Nevada to like 13.3 million ounces of gold. Origen's NSR was worth about 100,000 ounces of gold to them. That's worth whatever, $333 million. Origin paid $100,000 for that property. They spent about $100,000 acquiring and exploring that property, and it's worth $333 million. That's a sort of leverage that I'm looking for. Regarding Bitcoin, Elemental Altus, Tether, right?
Mhm.
Yeah, Tether just came in. Tether is Bitcoin stablecoin. It's got billions of value in it, and they are diversifying. And they bought a minority, like 44% stake in Elemental Altus just a week ago, and they have option agreement to increase it to a majority stake. And they're giving Elemental Altus loans. Why? Because they know the royalty model is the best way. They know gold is the way to go. So we're seeing crypto assets like circle back into gold. They're both stores of value. They're working together. And along with this, digital yuan, I see crypto unlocking tremendous amounts of value in demand in gold.
Mm, for sure, Garrett. And could you tell us, Garrett, more about your golden portfolio?
Yeah, so I've got the Golden Portfolio royalty base. I have my GP 10X, which is focused on developers and explorers. Both of them have done extremely well. Regarding the Golden Portfolio, like I've been an analyst for 20 years, and I've seen, miners go up and down, but I've seen the royalties just go up year after year. And I'm like, what if you made up the portfolio just up royalties? You'd be up 18,000% since 2007, since Franco got spun out. Like this is better than Buffett. Why? Because they have fixed costs, they have limited management, they have free exposure to exploration upside. And then all the smaller guys get bought out, and we just saw it. Origin just got bought out, and Elemental just basically a majority stake was acquired by Tether. Like we're seeing it in action, and my thesis is proving out day after day. So the Golden Portfolio royalty base, my GP 10X, a lot of explorers and developers and some major miners that they all have a catalyst that they can grow their production without dilution. I need to see the cash in the bank. I need to see their production profile. I need to see what projects are coming online. Because, throughout my career, I've seen many companies grow from 100,000 ounces to 1 million ounces of production over 5 years, over 10 years. But what happened to their share price? Their share price went down by, 50%, 60%. Why? Because they overpaid for growth. While management sits there and they trumpet, 10x production growth, our market cap has increased so much and blah, blah, blah. But yeah, your share price went down by 60% because your shares outstanding went up. So I'm looking for, the right management, the companies that are able to grow on a non-dilutionary basis. And then my starter portfolio is my GPIV, which contains four of my top picks. That's up 300% over the past couple years. We're in a little lull. Gold price came off a little bit. Yeah, so some of the developers down, but the bottom line is these developers are still driving value, on a daily, weekly, monthly basis. whereas their share prices have come off in price. So I'm seeing a greater opportunity here. One of them just released results of a gram per ton on big heap leach in Brazil, about over 323 meters, and the stock sold off 20-30% because one of the major shareholders decided to take profits. So, it creates an opportunity for, the next leg up in this gold market.
Hmm, certainly. Yes, I will have the link in the description, guys, for those who are interested. And just before we wrap up, Garrett, what excites you the most right now? It could be a project or a certain sector. What's on your mind?
Um, I don't know, the fact that, golds and silver, despite all the volatility and all the hysteria, they're still trading up higher. They're still hanging in there. There's not a massive pullback. The spending is increasing. It's not going to decrease. And what really excites me right now is I look at asset flows. And people are not invested in the sector yet. There's the average investor has less than 1%, probably six tenths of 1% of their portfolio invested in gold. The average person does. And when this gold market gets going, previous peaks have been, about 7% of investors' assets are in gold. So, looking at everything, we're in like the first or second inning of this 9 inning ball game. And there's a lot of investor assets to come on board, which would push the share prices higher. So I'm really excited that I can help my followers and subscribers get on board and give them the confidence to, ride this out, the full way.
Cool. Thank you very much, Garrett, for being here.
Okay. Awesome, bud. Thanks for being here.
Thank you. Thank you.